Good morning, everyone. Trust we are doing good. Welcome to another webinar series that we'll be holding today, and we'll be talking about the Smart Trader's Guide, Managing Risk in Forex, which is generally risk management. I'm your host, Akinwale Chibuike, and I'll be walking you through today's webinar, the process actually today when it concerns risk management. So if you can hear me properly, you can hear me clearly, do drop something in the chat box if you can. And how are we all doing this morning? I see we got a lot of people on here. Chicks, it's literally very nice having you on my webinars after all this while. Antonia, I'm glad you're on here. I'm glad I reached out to you multiple times and you were able to join me. Thank you very much. Goodness, I called your phone multiple times. You didn't pick up. Geoffrey, thank you very much. Zainab, thank you. Like a lot of new faces on my call today. I'm very, very, very glad. Latifat, Limat, thank you very, very much for joining me. And the old guys, yeah, I appreciate you all also. Thank you for joining me on this call. Wow, it's actually amazing. Like, I feel so excited this morning having everybody on this call. I'm sure the atmosphere will be lively. It's going to be very, very lively. I was going through before we dive right into what we have today. We all know the process. I'll have to talk about the product that we sell, then give a reference to the last class we had, ask questions, brief questions actually about the last class or anything that's bothering us about the financial markets. Before we go into today's class, then we marry on the call. Okay, so before we even dive into all of that, I was surfing the web. That was over the weekend, and I wanted to relate the whole thing. So Chooks, I believe you stay in the UK, right? So I read something about a 19-year-old who made around a million GBP. That's a million British pounds, just trading the financial market from a 250 GBP account. Wow, it was amazing. Like, I felt so interested in the story. I had to go and research about this person, and he just started off. It's a youngin, okay, and he started off very, very small, a small account, and he grew it up to a million GBP. It was quite amazing. Like, it literally blew me off my feet. And do you know that if you put in the same dedication into trading, okay, the commitment into trading, that you will trade to be successful, you would have such results also. And like, I was going through this boy's story, and it was just mind-blowing seeing a young boy making a lot of money and consistently profitable from the financial markets. And I read a lot of other stories also about our is it 45 or a 50-year-old man who started learning Forex around when he was 48, 49 years old and started trading, and he made a lot of money also, like currently successful right now. And it's so amazing seeing everybody on this call, and we are on this call for a reason, to know how to trade the financial markets and make a lot of money from trading the financial market. Yeah, good morning, Beckley. Hope you're good. I actually called you. Your number didn't go through also. Okay. Hope you're doing quite well. Wow, it's amazing everybody on here. I'm just so I've never been this happy in quite a while actually, and it's amazing having everybody on here. So what do we do at Eagle Global Markets for the new guys? Okay, at Eagle Global Markets, we offer you a financial service that has a very, very huge potential of giving you financial freedom. Yes, no caps at all. Just we giving you products that would literally equities and commodities. Okay, we'll give you access to trade Forex, equities, indices, and commodities, where you can trade it in our local currency, naira or in dollars. Naira or dollars. And the most amazing part is you can actually start trading and making money from the financial market with as little as 5,000 naira. That's the fun thing about our products. And when it comes to our MT4, our dollar account, you can start trading the financial market and making consistent profits with as little as 10,000 naira. Sorry, $10. Okay. And that's the fun part about the financial market. We have a lot of product for you. We have the cloud trade, which is where you trade the financial markets in naira, and we have the MT4 where you trade the financial markets in dollars. And also, if you are working 9 to 5 and you're very busy, you're a very busy person, or you feel you don't have the ability to learn about the financial market, or you get very busy at work, you can't find time to trade, we have a product that also works for you, which is the copy trade platform. And I know a few people on here have used the copy trade platform multiple times and I've made a lot of money from using the copy trade platform. I'm just so glad. If you are on here, you've used the copy trade platform and made money, please do drop something in the chat box, a testimony or a comment to actually make people know it works. Okay. Also, the chat box is to chat with me or other people in the room. The questions section is to ask questions about the financial market or questions from me, and the poll section is to respond to a question I asked. Okay, I could ask a random question, which is like, are you enjoying the class? And it's just a yes or no. Kelechi, yes, I've seen you grow out of actually the last 3 months where you've been using the copy trade platform and you've evolved into a better trader. I so much love that. I say my Chooks also, I so much love that. And it's glad seeing people give testimonies on the call. I'm just so happy that a lot of people that joined this call today would understand how to manage risks properly in the financial market and use it to their advantage and make a lot of money from that. Okay, so in today's class, I said we'll be talking about risk management. But before we talk about risk management, can anyone at all remind me of the last thing we discussed on the webinar? Okay, the last thing we discussed. What was our last topic? Anybody at all? If you attended the last webinar, you should know the topic if you're on the call. I will do well to answer the questions in a few minutes, okay? I think Debbie was on my last call. Well, everybody literally is new. Sawyer, you were on my last call also, if I'm not mistaken. Okay? Anybody at all? What we discussed in the last... Yeah, no, we talked about momentum in like the last... we talked about momentum in the last two calls, not the last call. The last call we talked about exactly how to trade using price action, where we talked about trends, the concept of confluences, how you could apply the little tools in the MT4 and the cloud trade platform when trading. That's what we talked about. Exactly. Goodness, I'm very glad you remembered. Okay, I'm very glad you remembered. And when talking about trading with price action, it's just about using a clean chart. No indicators on your chart. You just trading based off what you see, applying trend lines and horizontal lines to actually get the direction, the order flow, the trend in price. Okay, that's what we talked about on the last call, and I'm glad a few persons were able to put it into use and I got results. And also I can see on the Telegram group that results are actually skyrocketing. There's been consistency in the Telegram group since I got back on the Telegram group, and also the WhatsApp chat, the WhatsApp broadcast. You can see a lot of groups in there. So that's just it. Now to go to everybody's question, and please ask your question, drop your question in the question box. I'm answering questions there now. So Marvelous says, hope the copy trading doesn't blow accounts. No, not at all. It doesn't blow account. Once you apply the right settings, it's automated, so you can make consistent money. It doesn't blow account. If you apply the wrong settings, okay, the wrong settings, your account will get blown. I'm making you know this now. But when you apply the right settings, you don't over leverage. When this copy trading platform is set up on your trading account, you will do well to make a lot of money, and your account is at a lesser risk. Okay, a lesser risk of blowing. Okay, now. Is there any charges on the copy trading platform? No, the copy trading platform is free for all our clients, or free to all our clients. Okay, it's free. We actually pay these traders to be on the copy trading platform, so the charges come from us, not you at all. So we're not taking your money. The money you to use for you to use the copy trading platform, it is free. Okay, it is very free. Now, before we proceed. Before we continue, there's something I want to say. Okay, it's from one trader I look up to, and yeah, it is. Trading is the best method to make money or to grow your wealth in the world. Why? Let's take trading as a game. Okay, it has millions of players around the world. There's no discrimination. There's no limits to how much you can make. There's no limits to how much you can lose. Also, there is insane money to be made, and also there insane losses to be made. But remember, it's 24 hours a day and 5 days a week. So good luck and trade safe. It's from Reynard Thiel, one popular trader I look up to. Yes, on every trade you place, there is swap fee. So expect swap fee to be charged. That's if they hold the trade over into the new day. Okay, that's only when swap fees are charged. So marvelous. The minimum amount to start using our copy trading platform is $110. But I'll be candid with you. If you want to manage your risk the right way, you should be able to put in more than $110. Because of it is the minimum doesn't mean you have to start with the minimum. I hope you understand. Because it's the minimum doesn't mean you have to start with the minimum. I hope we do understand. So that's it on that. Any more questions before we jump into what we will be discussing today? I'll just wait a minute or two and just see if there's a question. So about what I read over the weekend, like seeing young people, young guys, 18, 19, 20, 21, 22, make a lot of money from trading the financial markets actually is something I really like. And seeing the story I told you guys I read online, and I was able to confirm if it was true. The man of 50-year-old making a ton of money from trading the financial markets to be able to pay off all his debts was something very, very interesting and touching. Like understanding these people can do it means you can also do it yourself. Okay? Meaning you can do it yourself using the copy trading platform, using the MT4 platform, using the cloud trade platform. You can also do it yourself. Okay, what I will do for you is I would send in our YouTube channel link right now. Then you can go and watch it on YouTube. Okay, I can't really do any explanation. This class is for risk management. Okay, it's for risk management. I'll send you the link to our YouTube channel. Just click the link or copy it somewhere. So after the class, you can go and watch the class on price action. Okay, so I'll be sending in the link right now. So I'll be sending in the link right now, and you can actually hop on it. Found it already. Let me just get you the whole channel link, because I put a lot of video out there on the channel. Like it's something you want to hop into. It's what your time. It's what 2 hours or 3 hours of your time in a day to just go through the contents of the previous webinars we've had on the website, on the channel. Actually, it would help you skill up your trading better. Okay, and also, if you are yet to join the Telegram channel or the Telegram group chat, you are missing a lot out. We have discussions that could help you better your trading approach. We share trade ideas amongst ourselves in the Telegram channel or the Telegram group. It is one group you don't want to miss out on. So you join using the link I will be sending after the YouTube link down below. Okay. Yes, you have to have a minimum of $110, yes, dollars to actually get started with the copy trading. So that's the link to the YouTube channel. Now, let me send in the link to the Telegram channel, okay? So we can all join in to the Telegram group also. There's a lot to learn on the Telegram group. Let me just share you a snippet of what we do on the Telegram group. Glitches on the Telegram group, chicks on the Telegram group, they can attest to the things we do on the Telegram group. Like it's very, very amazing, mind-blowing. We share trade ideas within one another. Sharing my screen right now. A lot of people joining. Brilliant. See what we do on the Telegram group. We discuss about price. We talk about a lot of things. See price action, trades given out, sharing bias when it comes to trading, discussing price, discussing about the economics of financial instruments, where price will be going to. We talk a lot. We share content also from books I've read before and books I believe would help you skill up your trading. We ask for people's thoughts on every single thing. Everybody shares trade idea, and this is one thing you don't want to miss out. Okay, this is one thing you don't want to miss out on. Exactly, Chuk said it all. The Telegram group is very, very great. You need to join up and learn faster. It will help you learn faster. Okay, so back to what we have today: risk management. Okay, risk management. Now, I won't waste much time. I won't bore you. Okay, I don't like boring my clients. Okay, I don't like boring my clients at all. So in this session, we will go through the general remarks on risk management, the concept of risk management, what risk management entails, which is stop losses, risk per trade and position size, profit maximization, how to evolve your trade, handling drawdown, and using leverage the right way. Then we will conclude on everything we will be talking about. Okay, so general remarks on risk management. Now, my thoughts, okay? I always share my thoughts, okay? I always share my thoughts first, but I let you understand that it's my thoughts and general concept or general perspective of the financial market. So I want you to listen closely to what I'll be saying, which is, did you know that risk management is very, very underrated in the financial markets? Like, people don't rate risk management at all because they believe it's all about the strategy. They have a working strategy. But I want you to agree with me because of it's true. You are not going to be consistently profitable. Do you all agree with that? Yes or no? Do a strategy that will the losses will be greater than sincere apologies for that. Sincere apologies for that. I mistakenly plugged out my Ethernet cable. That was why it kicked us off the meeting. Apologies for that. So I said, what do we all think risk management is? I want everybody's thoughts. Okay, if it's not um even if it's not everybody that will give their say on what risk management is, I just want to hear the general bias, your thoughts. Okay, a few people thoughts on what risk management is. So what is risk management to you? Remember, you are not wrong. Okay, you are not wrong. You're only sharing your view. Okay, so don't feel shy to spill what risk management is. Just pour it out as it is. Okay. Okay, it's the ability to manage risk. Okay, okay, brilliant. Risk management is the ability to manage and control risk that is acceptable to the organization. Okay, the level of loss you're willing to accommodate. I'll take that also. Risk management is a strategy followed to minimize the potential loss. Brilliant. I love. I'm literally falling in love with everything we all put out on this webinar, like our thoughts on risk management. I so much love it, like the fact that everybody had to pinpoint something important. Okay, everybody had to pinpoint something important, and I love the fact that we are able to relate to it in the right way. Okay, I'm still waiting for more response. They are the measures one apply to avoid losses. Okay, anybody else? Chooks, what about you? What do you think risk management is about? Debbie, no response. Sawyer, I was expecting you to talk on this. Ajus, also no response. Okay. Is minimizing your loss, maximizing your profit, ability to remain in the market, controlling your emotion. Wow. I love the fact that you added emotion to it. Like emotions play a major role when we make trading decisions. Emotions play a major role. We'll talk about that some other time. Risk management is focused on anticipating what might not go to plan and putting in place actions to reduce uncertainty to a tolerable level. I so much love that. Now, do you know that the financial market is structured in a way, in a format of if and if not, or if this then that? Do you know? It's all based on probabilities. Okay, you can't predict the market, you can only react to the market. I hope I'm making sense. Okay, you can't predict the market is going up. No, the market has to be going up before you now say it's going up. You have to react to it. It's going up. You are reacting to it going up. You're not saying it's going up. You're just reacting to it. Most people think they predict the market. No, you don't. You're only reacting to what the market is giving you. And that's the logic. Okay, that's the logic behind it. And that is how you see these big traders make a lot of money. That's how you see these young people make a lot of money. Because why? They are reacting to the market. Okay, after reading that 19-year-old, the story of that 19-year-old boy who made a lot of money trading Forex, I realized something from what he said in the newspaper. Because there was a screenshot of the newspaper, his interview, and he said something. He was just following what the market was doing. Remember, he was just reacting to what the market was doing. You need to understand that you need to react to the market before you can actually be able to trade the financial market. Okay, is it going up? React. Is it going up? React to the market. Is it going down? React to the market. Is it going up? React to the market. Is it going down? React to the market. That's just it. Simply what it is. Simply what it is. Okay, so now what is my own thoughts on risk management? Okay, now first off, we understand it's all about trading. I'm not trying to bore anybody. Okay, it's not boring. It's just for us to learn. Trading is generally buying and selling in the financial markets. Okay, now when you are buying and selling in the financial market, you don't want to get cheated on, right? Now you don't want to get cheated on. This is where you now bring in the factor in the fact of what? Risk management. Okay, Now, risk management is derived from two words: risk and management. Risk is danger, okay, or losses. Management, curbing the situation, okay, curbing the situation. So how do you curb the situation of losses? Is by applying the right risk management. Bam. Do we all understand? If we do understand, please drop a yes in the chat box, and if we don't, please drop a no in the chat box. If we do understand, a yes in the chat box. If we don't understand, no in the chat box. Let's do that real quick. Okay. Okay, the thumbs up is a go for me. Okay, no. Okay. Let me use a simple example. I like cars a lot. Like I say, I like cars a lot. So, what's the popular car around now? I think it's a Benz, a Formatic. Everybody likes a Formatic. You would like to drive a Formatic, right? And a Formatic is like 1 million, 2 million, which is very, very realistic. You could earn ₦1 million from trading, and you'd want to drive a Formatic. Now, you like the Formatic so much, and remember, cars are prone to accidents, but you don't want to injure yourself. Before you drive, you put on a seat belt. That's risk management. You are managing the fact that, okay, in case of incasity, as they always say it, okay? In case of incasity, as they always say it, you don't want to get injured in case of an accident, in the sense that if an accident happens, so you put in a seat belt. You are managing the risk before it happens. That's what risk management is all about. You are protecting yourself first by putting on the seat belt. Now, Zainab, do you understand? Address, do you understand? Let's be fast with the typing, okay? Let's be fast with the typing. Brilliant. Great. Now, let's bring it to an example. It's very easy to build a house nowadays. Real estate is very easy to get involved in. If you want to build a house, do you want the house to collapse? No. What do? You manage that risk by using the right materials to build the house. Simple. That is what risk management is all about. Doing the right thing in the financial markets. Okay, you need to do the right thing in the financial markets, and that's what risk management is about. That was how that boy was able to grow a 275 GBP account to a 1 million GBP account. He was managing his risk. Okay, that was how that man was able to pay off his debt, trading the financial market. He was managing his risk, and that is the same thing you should be doing. Manage your risk. He remembers, or he understands that he has a 275 GBP account. He can't trade anyhow. He can't open crazy lot sizes like people do these days. He knows he has to scale up this account to a certain amount where he is comfortable trading huge lot sizes. You see somebody with $100 account want to trade a standard lot. It's not possible. You're not a guru, okay? You're not a guru. The market does two things. It either rewards or humbles you. Most people get humbled. They don't get rewarded. Just few get rewarded, and that is why you're on this call, to teach you how to get rewarded by the financial markets. Okay, so into the next part. Now that we understand that we've talked about the general remarks on risk management, understanding that risk management is underrated in the financial market, but it's the most important thing in the financial market to know. Like I said, if you have a working strategy and you can't manage risk, being consistently profitable is far from you. Because you need to understand how to manage risk. Fine, the strategy will work always, but you will mismanage the opportunity that the strategy works by not understanding risk management. And we talked about the concept of risk management, where we said it's an approach to curb losses in the financial market. I explained using a Formatic, a Benz, where you have to put in your seatbelt before you drive in case of incasity, like I said. In case an accident happens, you stay protected. And also I said, it's very easy to build a house these days. You could make money from the financial market and start building a house, a bungalow, a flat, a duplex, a semi-detached house, okay? And you don't want the house to collapse. What do? You use the right materials when building. That's simply what it is. Now, what risk management entails? Let's pick it one by one. I want to hear everybody's thoughts. Let's talk about stop losses. What is stop loss to you? What is stop loss to you? Responses in the chat box, okay? Responses in the chat box, okay? Response in the chat box. What is stop loss to you? Okay, I love the response that are coming in. Love the response that are coming in. So let's check the poll section. I dropped a poll right there. Let's respond to it. Okay. Be honest. Be honest with me. If you're not enjoying the class, please click the no button. And if you're enjoying the class, click the yes button. Don't say I don't want you. No, don't make me feel bad. It's actually making me know how to do my job better. Okay. So let's do what to respond to the poll. Okay. Wow. Someone said they're just hearing about stop loss for the first time. Okay. First time. Debbie also, first time hearing of a stop loss. Wow. Okay, stopping your loss. Stop loss is the profit of the institution. Kelechi, let's take it a little bit slow on the smart money concepts. Okay, let's take it a little bit. Smart money concepts is true. Stop loss. I understand. Not everybody will understand what you mean, though. Okay, so just a layman concept. Okay, and tricks. Yes, most people are new to the financial markets. Don't let's rush them. Okay. Not to empty your account. I love that. Not to empty your account. Brilliant. Brilliant. Chooks, stop loss states the instrument being bought or sold, which reaches a specific price as the stop price. Brilliant. I love that. Stop loss is the highest risk you can accommodate in a given order. Amazing, Becky. Amazing, Beckley. Amazing. Very, very amazing. Now, Zainab, you're just hearing of stop loss for the first time. Now, we have two types of orders in the financial market. Okay? There are other types of order, but the two, stop loss and take profit. Now, from the word stop loss and take profit, let's start with take profit. Okay, I'm just breaking this down because of you haven't heard of it before. Take profit is when you buy or sell a financial instrument. Okay, you want to tell e.g. at Equity Global Market, your broker, that if price goes from 5 to 10, I want to take my money off the table when it gets to 10. Okay, it's as if you bought a bag of rice for 10,000 naira and you want to sell it at 15,000 naira. If you sell it at 15,000 naira, your profit is 5,000. Same logic in the financial market. If you buy gold at $5 and gold gets to $10 and you said that's where you want to close your trade, your profit is $10. Okay? So it closes at $10 for you and keeps your profit in your trading account for you. That's what take profit is all about. Let me use a live example to explain it. How do I use a live example to explain it? Okay, I found the right example. Now, let's say you go to a store to buy groceries, okay? Then, when you bought that groceries, somebody walked up to you and said, don't worry, I'll pay the bills. Then paid the bill and still gave you a spare 10,000 naira, okay? So that's like take profit in real life, okay? You didn't spend money, but you made money. So do you understand now? Do you understand now, Zainab? Do you understand? And stop loss is when price is going against you. So let's say you buy or sell a financial instrument and it's not going in that direction that you want. So you say, okay, if price doesn't go from 5 to 10 and it started going to 3, it's coming down. You say, close my trade for me at 3. So you lose money in that instance, okay? You lose money in that instance because of it didn't go from 5 to 10. It went to 3. You lose money in that instance. Now, stop loss in real life. Stop loss in real life. Let's use the concept of that, the grocery stuff. So you went to a grocery store and you already bought everything you wanted. Then you saw this baby boy crying and said he wants a candy. Well, you don't have money on you anymore. And there's a money in your credit card that is meant for your savings, okay, to pay a certain bill, okay, to pay a certain bill. Now, if you then buy the candy for the boy and use your credit card to pay, you're at a loss. Fine, let's ignore the fact that you did a good thing. Now, let's consider the fact that that money is meant for something else, but you spent out of it. You incurred a loss that way. So, Zainab, do you understand? Don't mind those that are saying stop loss is simple. Don't mind them. You're here to learn, okay? You're here to learn, okay? So, do you understand now? Please let me know if you don't understand, okay? Let me know if you do understand. And the highlight said stop loss is designed to limit an investor loss on a security position. Brilliant. Like that's top notch for me. Top notch. Then Latifat said this is an order to close your trade after hitting a particular loss price. I love that also. So say no, please let me know your response. Do you understand? So we can dive right into stop loss in my own way. Now, stop losses is a form of risk management, okay? A strategy to manage your risk. Let's put it that way. Oh, you didn't get it. Wow. Okay, I have a class on stop losses and take profits on our YouTube channel. Okay, I dropped the YouTube link earlier before we began this class. Just scroll back up. Scroll back up. You would find the link there. I will do well to drop it again for you. Okay, then just go through our channel. There's a lot to learn there. You see the stop losses and take profit class. Okay, so you just hop on the webinar, the previous webinar, and you learn from it. Okay. Great. Now, stop losses. I said stop losses or stop losses is a certain type of strategy that revolves around risk management to help you not lose all your money in the financial market. Okay. Now, what does stop loss really entail? Remember, we said the financial market is a situation of if this, then that. Okay. If this doesn't happen, then that will happen. And if that doesn't happen, this will happen, right? If price doesn't go up, it will come down. If price doesn't go down, it will go up. That's the meaning of what that statement means. Now, stop loss protects you from those type of situations. Imagine you are buying a financial instrument. Let's say you are buying AAABBB. Okay? Buying AAABBB it doesn't buy. It started going down. Okay? Remember, if you are buying, you are expecting price to go higher. If you are selling, you are expecting price to go lower. Now you are buying and price start going lower. Now, what stop loss will do is it tells us, if you put a stop loss on that trade, it tells us that, okay, this gentle lady has told us to close this trade for her if it gets to 0.01. Okay, now price now goes to 0.01. We close the trade for you, which protects your capital. Instead of you losing 50,000 naira, you only lose 500 naira. That's the advantage of stop losses. It gives you a upper hand. It helps you understand that you could structure, okay, you could structure your trades in a way that you never lose crazy amount of money when trading the financial markets. Okay, do we understand now? If we don't understand, please let me know. Okay, if we don't understand, please drop a yes in the chat box and let's respond to the poll. We have 15 people on the call and only 7 has responded. Let's do what to respond to it. Okay, great. More response before we proceed. Now let's go to the whiteboard. I love the whiteboard part. I love the whiteboard part when it comes to the whole class. Whiteboard is interesting because we get to see it in real time, okay? Or diagrammatic expression in real time though. Now, let's look at this. Just look at these prices here, okay? These prices here. Just assume. I want to draw something out. Come in a minute. Let's start from the scratch again. Okay, so right here, okay, so let's say you bought AAABBB here. Okay, you bought AAABBB here. What you are actually telling us is, so let's use this line as entry price. Okay, this black line is entry price. Now, This green line above is your take profit, okay? Where you want us to close your profit for you. If your trade goes into profit, remember we are buying, so your take profit is above, okay? We are buying, so your take profit is above. Now, let's say you bought at that black line. This red line is your stop loss. Trying to put on color red on this. Great. Now, let's say you bought here and price goes up to your take profit. Once price gets to this area right here, we are going to close your trade and put your money with your profits into your trading account. But if price now goes to your stop loss like this, price doesn't go up, or price does this, it went up small, then now came tumbling down. Once you get to this red line, we will close your trade for you in loss. Now, closing your trade for you in loss protects your capital. So let's say this stop loss is like $2. This is your take profit is $100. So if price trades back to your stop loss and you have a balance of $510, we will only close this trade when it crosses this red line, and $2 will be removed from your trading account because of it ended in a loss. Okay? So that's what this is the best way I can describe stop loss to you. Actually, there's no diagram, there's no picture to show stop loss. It's just diagrams, and this is like drawing the diagram from the scratch. So this is how it works when it comes to when you are buying. Now, if you are selling, okay, if you are selling a financial instrument, remember you want to sell at this black line. Price should come to your take profit, which is down. But if price doesn't come to your take profit and it goes to your stop loss, the trade will close in a loss and you will lose money, but protects your overall capital rather than not using any stop loss at all. If you do not use any stop loss, you can lose all your money in one stance. But losing the stop loss reduces how much you'll be losing in a trade. And that's why it's crucial. Always use a stop loss. Okay? Always use a stop loss when you trade. It protects your capital. It protects your capital. It's the best way to protect your capital. Okay? So, do we all understand everything about stop loss now? Well, just the very fast that we discussed. Do we all understand it? Yes or no? Yes or no? Do we all understand the things we discussed about stop loss? Okay. Risk per trade and position sizing. Now, remember I said something earlier where I talked about if your account was a $100 account and somebody wants to start using a standard lot. Remember I talked about it. This is where risk per trade and position sizing comes in. Understand that you need to have a certain stated risk that you want to take on your capital every single time you're trading. It is your risk that will now determine how your stop loss should be placed. How? Risk per trade. Know that if you have a $10,000 account, $10,000 account, okay, $10,000, you want to risk 1% to 3% per trade, okay? On every $10,000 account, I'm just saying it's just a hypothetical example, okay? On a $10,000 account, you want to risk 1 to 3%, okay? 1 to 3% per trade. Now, let's say you now settle to risk 2% of that $10,000 per trade, okay? What you are literally doing is, let's pull that up, okay? Let's pull that up. What you are just doing, or what you are basically doing is what? 2% times 10,000, which is what? 200. Now, what you are doing is basically on every single trade, you'll be risking $200, okay? $200 on every single trade. This is what will now help you determine what position size you'll be using and where your stop loss should rely on, okay? So if you are supposed to use one standard lot, 1.0, reduce it to 0.5. Why? So that you can give your trade a breathing space and also use an appropriate stop loss. Okay? And also use an appropriate stop loss. So that's all it entails when it comes to risk management and position sizing. Do we all understand? That's what risk per trade and position sizing all entail. When you know how much you'll be risking, the percentage you'll be risking per trade, which is 2%. Wow. Okay, which is 2%. It will help you determine what position size you should be trading. Let me use a live example to explain it. You understand now? You have 100 million naira in your trading account. Okay? You have 100 million naira in your trading account. There's a lot of bills on ground, but you need to buy a car. Would you go and buy a Ferrari, or you would settle with a 2005 Benz? What would you do? I want response in the chat box, okay? Give me your response in the chat box. Will you go and buy a Ferrari knowing that there's bills on ground, or you would go and buy a 2005 Benz or a Lexus, a 2005 Lexus? What would you do? I want more response. Okay? What would you do? Is it the Ferrari you go for, a 2005 Benz? Please, let's just be simple with the response. I don't want somebody saying that I'll go for Ferrari because I believe God will provide the money. I don't want such. Let's just be straight, okay? Exactly, you go. Someone even said he would prefer a Toyota in that instance. Now, that is risk management. Paying your bills first is what? Sorry, risk per trade. Paying your bills first, risk per trade. Going for, I knew Chooks would say Porsche. I knew he would say Porsche. Okay, now let's go back to what we are talking about, which is risk per trade. Understanding that you have $1 million naira, okay, 100 million naira, you will settle for something less so as to be able to cover the remaining debt. That is the same thing risk per trade is saying. Because of you have $10,000 as your trading balance, doesn't mean you have to risk the whole $10,000 on a single trade. Okay? Because you have 100 million naira, doesn't mean you have to use the whole 100 million naira. Even if you don't have any debt on ground, doesn't mean you have to use the whole 100 million naira to buy a Ferrari or a Porsche. Okay? You settle for something less, possibly a 2005 Benz, a 2005 Toyota Corolla, a Honda Accord, something easy, something cheap that you could use the funds to do other things. You will not put into the consideration that it is easy to what's it called? It is easy to manage the maintenance of a Corolla, a Honda, a Lexus, or a Benz, but it's very difficult to manage the maintenance of a Porsche or a Ferrari. That's what risk per trade is. So you know how much you are putting out, risk, how much you are risking on a single trade, how much you are risking to buy that car. You can't risk the whole 100 million to buy a car. Some people do that, but don't be that type of person. Okay? Now, in this instance now, take the trade as a car. Okay? Trade is equal to car. 100 million naira is equal to $10,000. Okay? Do you want to use all your $10,000 to buy a car when you know that there is debt on ground? No. That means you'll be taking a part of that $10,000. A part of that $10,000 to buy a car, which is where we now say we are risking 2% per trade. So you'll be risking 2% of that $10,000 to buy a car. Do we all understand now? Yes or no? Do we all understand now? Yes or no? Latifa, Zainab, please let me know if you do understand now. Great, great. Now, position size is the car you settled for. Okay? Position size is the car you have settled for. Now, relate the position size as the lot size you will be using when you're trading. So, car is now equivalent to lot size. Take a Porsche as one standard lot. Take a Ferrari as a mini standard lot, okay? Then now take the Toyota or the Corolla or the Honda or the Benz or the Lexus as a micro lot. Do we all understand what it means now? Yes or no? Before I proceed to profit maximization, how you can evolve your trades. Yes or no? Do we all understand? Okay, great, great. I love the fact that we got a lot of yes. Please, I've just put out only one poll and we have 8 responses. Let's all do well to respond to the poll, okay? We are 17 on the call. Now, profit maximization. How to evolve your trade. It's another risk management concept, strategy that you can use. How do you evolve your trade? How do you maximize your profits? Can anybody tell me how they maximize their profits when they trade? I want to know how you do it yourself before I show you how I do it myself. Before I tell you how I do it myself. How do you maximize your profit? How do you evolve your trade? Someone said trial profit. Okay? Well, trial profit is not really a profit maximization aspect. It's just a stop loss aspect to protect your profit, okay? So I won't take that from Sawyer. Sawyer, I expected better than that. David, it's no problem at all. I tried calling you multiple times. Your number was not going through, okay? Anybody else? Tell me, how would you maximize your profit if you were trading? Okay, Kelechi, you got me there. Trades at interval. That's very, very brilliant. I do that also, okay? Use manual trialing and add more trades at interval. Okay, brilliant. You're risking the profits, no longer the capital. I love what you did there. I love what you did there. Anybody else? Wow. Okay, nobody else. Let's go. Okay, let's go. Profit maximization, evolving your trades. Now, imagine you enter the trade and the total profit, guaranteed profit that you will make from that trade is 300 pips. You now entered with 0.01. You made profits, right? But you never made maximum profit from that trade. You made profits, right? But you never made maximum profit from that trade. Why? Because initially, force or hindsight, you knew it was 300 pips. If it was me, I could have turned this 300 pips to 3,000 pips. Now, how would I do it? I'll teach you how I do it. Now, let me share my whiteboard. Okay? I'll tell you how I do it and I'll show you how I do it. Let me share my whiteboard. Now, I will not be showing you a diagrammatic expression anymore. I'll show you on the live chat, okay? On a live chat. I'll use S&P 500, okay? I'm actually looking at S&P 500. Wow, is this S&P 500? It can be this. Oh, okay. I was wondering, why is my bullish candles to the downside? This is what I wanted to see. Now, if somebody told you 2 days ago that buy S&P 500 at at 40K, okay, 4,091K, okay, 4,091K or 4,091K, okay, and told you it would move to, let's say, current market price here, okay, current market price. I told you 2 days ago that buy S&P 500 from 4,091 to 4,217. You knew this information forehand, okay? You already knew this information forehand. Now let's check how many percent or how many pips is that. Don't worry, that's 124 pips. If it was me, I would have doubled this 124 pips to 1,240 pips. How would I have done it? Very simple. I would have entered like 3 positions here. Because why? I'll start saying some things. This is, let's just call it layman terms. This is support right here, okay? This is support. I know a few people will argue with me. Somebody like Kelechi would say that's not support. But Kelechi, let's just call it support, okay? Let's call it support right there. No, Alimat, what I mean is on every single trade, you should risk 2% from your capital on that trade. Okay. So if your capital is $10,000, risk 2%. Always risk $200 per trade. That's what I mean. Now, when you're risking $200 per trade, understand that you must be able to make more than $200. Don't risk $200 and make lesser. You are running at a loss. You are doing it the wrong way. Okay. Risk $200 and be willing to make more than $200 on that trade. Do you understand? Now, look at that area. That was support. You bought from that area. You bought only one position because of somebody said it's going to go 124 people, and you are happy. You made 124 people. Now, imagine somebody now bought 3 positions here. 3 positions there. 3 times 124. That is the first profit he has made. That was guaranteed. Okay? 3 times 124. That was the first profit he made. That was like the first profit he made. That's 372 pips. 372 pips first. Okay? 3 positions. Just switch 3 positions, I made 272 pips. Now, the person now came here. When he saw that this candle was very, very big, he now started adding 2 more positions again here. He added 2 more positions again here. 2 more positions from this instance. Let's see how many pips that is. Let's just see how many pips that is. Let's see. My mic. Yes, I'm on here. I only changed my mic. That was why I felt the other mic was not good enough, so I changed my mic. Now, look at the second position. That was 79 pips. Now, remember, the person entered 2 more positions, and there was a guaranteed 79 pip. Okay, there was a guaranteed 79 pip movement. Okay, so 2 times 79. That will give us 158. Okay. That will give us 158 pips plus the 372 that we have before. Just watch you. Then after the person saw that there was a retracement, it was like, wow, this is another opportunity for me to enter. He now decided to enter 5 more positions. Okay. 5 more positions for 70 pips. Okay. For 70 pips. That was 350 more pips, okay? 350 more. So let's say that was all the person did. That was all the person did. So 372 plus 158 plus 350 pips. The person made 880 pips on that same single trade that made you 125 pips. On that same single trade that made you 125 pips, the person made 830 or 880. I can't really remember. 880. That is how you maximize your profit. That is the first method of profit maximization, by adding positions when you see that there's an opportunity to add positions. You don't just add positions blindly, okay? You make sure that there's an opportunity for you to add positions. Then you add positions. Now, another method is increasing lot size. If your initial lot size was 0.05 and they told you this was guaranteed, you could have entered with 1 standard lot. Then combining the knowledge of scaling in that you understand, yeah, you would have entered 0.05, yeah, you would have entered 0.02 or something till it all adds up. That is how you make the max position, or that is how you maximize your profits on every single trade. Okay, and that is what they call evolving R. Okay, evolving your trade. You are evolving the rewards. Okay, evolving R. Do we all understand? Do we all understand from the little example I just gave of how you can maximize your profits per trade? I'd love to get more yes or more no's. Either ways. Okay. Do we all understand? More response. Okay. More response. It shows me I know what I'm doing. Do we all understand? Like, are we following? Have I been making sense since? Okay. Let's go to the second to the last, or second to the least, actually. Handling drawdown. What do you understand as drawdown? Wow. Okay. For the profit maximization, right? Goodness, is it for the profit maximization? Please let me know. Okay. I was expecting somebody to say that though. Handling drawdowns are not pullbacks. Okay, let's not mistake, or let's not interchange them for one another. Okay. Now, goodness, what I was just saying is understand or learn how to add more positions when you're trading. That way you can maximize your profit potential. So I said, if somebody told you 128 people was guaranteed on a trade, you don't just trade it. Okay, you don't just enter with 0.01 because of you feel you make 120 something points. Understand that you can scale in multiple times on that trade and capitalize the max on it. So the other thing I explained was, if you use 0.05 initially, try to use 0.10. Try to use what? 1.0. Then when you want to scale in, now reduce the 1.0 lot size, like 0.50, 0.05, something like that, so that you are only risking the previous profits made and not your capital. Okay, that's how you don't risk your capital. Profit maximization doesn't allow you risk your capital anymore. It allows you risk profits made, not capital anymore. Zainab, you know what we will do? I would gladly schedule a personal Zoom session with you tomorrow, just to put you in the right mindset of trading. So reach out to your account manager, tell your account manager what I said, then we'll hop on the Zoom session. I'll schedule something for you tomorrow out of my free time. Okay. Now, drawdown is not pullback. Okay, drawdown has never been pullback. When you enter a trade for a buy, if price start going against you, that's a drawdown, not a pullback at all. Okay, so how do you handle a drawdown? Walk away. That's how you handle the drawdown. Best for me, I walk away, because I already have a take profit, a stop loss, and my entry price. So I don't see any reason a drawdown should bother me. What I do is walk away from my chart. I don't check my trades every time. I trade mostly the daily to the 4-hour time frame. So there's no reason for me to check my trade every 1 hour. Why? Because it takes 4 hours for one candlestick to form on the 4-hour time frame. So I check like after business close during the day. I'm off work. I check. Okay, so that's what I do. I just walk away. Another thing you can do is read a book. Just try as much as possible to do something that puts you in the right mindset when trading. That's how you handle a drawdown psychologically. On the chart, put a stop loss. That's how you handle the drawdown. Put a stop loss. Understand that there's a level price you get to. Let it invalidate you at that level. That's how you handle a drawdown. Do we all understand? Okay, I will schedule one for you also. We've got just 11 response to the poll. We're 18. I would love more response. I'm sending out another poll right now. Oh, okay. Sending out the poll, publish. Great. Let's respond to it. Thank you very much. Okay, you don't understand what I said about handling drawdown. Okay, Alimot, let's take it from the top again. I said drawdown is that point in time where you place a trade. then it start going in a loss against you instead of going in the right direction you said. Now, how do you handle it? Is by just walking away from the chart. Remember, your stop loss is there, your take profit is there, your entry price is there. Just walk away from the charts. Don't feel entitled that the market must go in your direction. Just anticipate how price will react or how you have reacted to price. That's how you handle a drawdown. Or read a book that calms your nerves. Just have the right mindset. Do something that gives you joy. That's how you handle a drawdown. That's how you handle a drawdown. Now, a pullback is when price is buying, but retraces, moves down a bit before having enough energy to go back up. Okay, so that's how a pullback occurs. Okay, pullback is not a drawdown. Okay, now how do you use leverage the right way? This is the last but not the least of everything we've been talking about. At Eagle Global Markets, now most clients come and say we don't offer a leverage of 1,000, 2,000, 3,000 and all. You need to understand that the market is regulated. Okay, SEC could sue us for it. We could be closed down because of SEC for giving excessive leverage. But how do you use the leverage that we give you, which is a 1 to 200 leverage the right way? Now, you can request for more leverage based on your account balance, okay? Based on your initial deposit, your equity that you have with us. You can request for more leverage. We would add up more leverage for you, okay? But how do you use the 1 to 200 leverage the right way? Now, 1 to 200 means if you have $10 in your trading account, we are giving you 10 times 200 of that balance, okay, in leverage form. That means we're giving you additional money. You can't take the money though. You see your balance there, but we're just giving you additional money in form of margin, okay, to be able to hold trades, because your $10 can't actually do anything in the market. That's why we give you leverage to trade the markets. How do you use leverage the right way? Number one is to never over leverage. Because of you understand that a 1 to 200 risk to leverage level gives you opportunity to do 200 times of that $10. Doesn't mean you have to enter a trade that is 200 times. No. You need to understand that you want to protect yourself also. You don't want to lose money. Take it slow, don't rush it. Use the right lot sizing and all when you trade. That's how you use leverage the right way. And that brings us to the end of everything we'll be talking about risk management. And let's hop on to conclusion. Now, let's do something different today. When it comes to this conclusion today, which we are at, tell me so far what you've learned from everything we talked about in the chat box. I'll read them out so I can know if we did learn something. That's how we should work on our conclusion today. So let's go. Anybody at all? Anybody wants to talk to me about so let me invite Chooks, let me invite you on stage, okay? Let me invite you on stage. Okay, I just sent you an invite on stage. Please check if you can confirm and join me. Then tell me what you learned so far from what I discussed today. Kelechi, I would invite you. I'm just inviting 3 people. So if you want me to invite you on stage, just say in the chat box. I'll pick randomly, okay? So Chooks, I sent you an invitation to join me on stage. Would you kindly confirm that? Would you kindly confirm that the invitation I sent you so you can join me on stage? Kelechi, I sent you an invite also. Then Ajus was the first person to okay, Kelechi, I'm great. Please try to move to a background where there is no noise at all. Okay? Please, no noise in the background where you'll be texting me from. Sorry. Okay, so you guys should kindly join me on stage, please. If you've joined me on stage, please let me know. Okay, great. And do you mind turning off your camera for safety purposes? Okay. Okay, great. Now talk to me. What have you learned so far? Ajus, okay. Tell me what have you learned so far?
Yeah, I've learned how to manage my accounts this month.
Brilliant.
How to manage my risk and my account.
Brilliant. I very much
And
love
on
the fact that
how to add up trades when trade is moving.
brilliant. I
And
love the fact that you've
that's
learned
good.
how to add up trades when trades are moving. That's like one major skill we need to learn as traders to maximize the most profits out of a single trade.
Yeah,
Please
I'll
do
be
go
doing
ahead.
it, but I don't know what I'm doing.
You've been doing it, but you never knew what you've been doing. But now you
I
understand
never
what
knew,
you've been
but
doing now.
yeah, I understand I understand it perfectly today. So, and it's going to push me to another level of trading. And also, I've been losing money due to my greed and over leverage. So I've learned how to manage my risk the way it should be. And the story of that boy shocked me.
Exactly, like it shocked me also, and I was like, my age, like I was this is very young. I'm very old. I'm very old, and see a young boy doing this. Okay, so I'm glad
Wow,
you
wow.
learned these things, and I'm hoping you start implementing it. And the talks on greed. Let's try to reduce greed. Like the financial market is a $6.6 trillion market. Okay, $6.6 trillion. You could make a lot of money, but
Yeah.
remember, there's money to be made every day, okay? Money is to be made, but you don't need to trade every day, okay? Just trade only when the opportunities come to you, and that's how it is. Thank you very much for joining me, Ajus.
Yes. Thank you very much. I really understand, sister. Thank you very much.
You're very much welcome. Okay, Kelechi, let's head on to you, okay?
Yeah. Good
So I
afternoon,
just
everyone.
sent you to unmute yourself. Great. Good afternoon,
Yeah,
Kelechi.
yeah. Yes, I think the shocking stories of that young guy that took his account from £200 to £1,000,000 because trading takes a lot of discipline. So I think
Exactly. I
it has
remember
been
we
boggling
spoke
my
about
mind.
this. Exactly. We
Yes.
spoke about this multiple times. When you would call, we would talk. I told you, trading will come to you. Okay, let me explain
Yeah.
this to everybody. Profitability when it comes to trading. I said it on the Telegram group yesterday. That's why I'm begging everybody join the Telegram group. There's a lot to learn. Profitability comes to everybody at different time. Okay, some people 6 months once they start learning trading, they start making a lot of money. Some people 1 year after they start learning trading, they start making a lot of money. Some people 2 years, 3 years, 4 years, 5 years, some 6 years, some 7 years, some 10 years, and some never. But because of I said never doesn't mean you have to give up on trading even if you're losing money. Just understand what are you doing wrongly that you can do the right way, and that's
Yeah,
how
exactly.
you make money from the financial markets. So,
Yeah,
Kelechi, tell me
exactly.
what did you learn so far?
I learned basically, I think the major, how will I put it, like emotions are one of the hardest thing to get over in trading, basically. And I think
Emotions
most trade,
emotions are actually one hell of a thing when it comes to trading.
yeah,
Like the how would I put it? I don't want to use some word, but it just makes you do a lot of mistake. Like you trade based off emotion because of you
exactly.
lost money buying. You say, okay, I will sell. You lose money that way. Okay, you lose money that way. So never be emotionless when you're trading. Key, very key. Being emotionless when trading is very key, and that's why I want everybody on this call to understand. Be
Yeah.
emotionless. Okay,
Mm.
emotionless. That's how
Yes.
you become a master or a
Mm.
profitable trader, okay, when trading. So go ahead, I can hear
Yeah.
you.
Yeah, and trading is, I think for me, I think continuous learning. That is, no matter how many webinar I attend of yours, basically, I still want to attend more, even no matter how much I know, because I've come to understand that we just have to keep on learning and understanding with the market. I think that's basically it for me.
I'm glad you prove these points. I can testify to that. Though I know you've been following me like since around February we started, or January we started this class, and you've been learning closely PDFs, contents. You've been giving me reports on how it has been going, and I'm glad seeing you also being able to call moves on the Telegram channel, like price is going here and price goes there. It's all about attaining mastery and an edge in the financial market, and I'm glad you've attained that level. So I think Chris is yet to join us. Chris, I'm actually waiting on you to join us. Okay, I'm waiting on you to join me. The demo account on the site, please send a message to support. Okay, send a message to support. They will get that fixed up for you. Okay, Chooks, are you too busy to join us? You're getting ready. You've been getting ready to join us. Please do join us. Okay, I'd love to actually get your thoughts also on this. I think this is something we need to start implementing, getting people to hop on the call with me after the call, talk about what they learned and all. So that's just the conclusion is when you know how to apply these things, to be very, very, very easy. Okay, Chicks, you know what? Let me cancel the invite and resend the invite again, okay? I'm inviting you on stage right now again, okay? So let's see if it works that way. So, like I said, the major thing is to like get us all to possibly come on the webinars regularly. After the webinar, talk about what you learned, encourage people also. Like Ajos, Chooks and Kelechi have been amazing. When it comes to trading. Like I follow them up regularly. They text me on the Telegram channel. We talk a lot, and that's how it should be. Learn more, and apply the things you learn. You are forever evolving. The market is also forever evolving. Okay, Chooks, I sent the invite again. I don't know, possibly it's because you're busy. You might not be able to join us. I'm just glad this webinar we were able to learn a few things from it. So I'll be canceling the invite since he was unable. Anybody wants to take Choose space? Anybody at all wants to take his space? Possibly next week he would like to join me. I'm glad, Debbie. I'm glad. Okay, can someone please help me drop the Telegram link again, please? I can't really start scrolling back up. The chats are quite much on my end. Anybody at all? Let's help me drop the Telegram link down in the chat box. Okay, found it. I found it already. Anyone wants to take Chook's spot on the call, or we don't want to speak up? Okay, so in that case, we've come to the end of this webinar. Actually, we've come to the end of this webinar. I'm glad everybody could actually join me on the call. I'm glad we could learn a lot of things from the call. I'm mostly glad for the fact that I got people to come on here and express themselves how trading has been in the time span that they've been learning. So thank you once again for joining me on the call, and see you on Thursday. It's an Ask Me Anything session. Okay, come with your questions. Come with truckloads of your questions. I would answer. Also, possibly I'll be talking about a briefing stuff before we hop into the whole thing. I would look for more motivational stories like this to keep everybody prepped up, so to know that there's a lot to be made from the financial market. My name is Akinwale Chibuike, and yes, I'm your host, and I'll forever be your host on the webinar. Do have a lovely afternoon. Let's get on with everything we've been doing in the day, and stay blessed.